Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Sebastien Page joining us right now. We got three things to talk about with him. And of course, Rowe Price had a multi-asset chair of asset allocation. And, you know, that's the focus of the discussion. We got to talk about his Canada, so much in the news right now. But I got to put this book up. This is out in a couple weeks. It's Book of the Month Club, Reader's Digest. The Psychology of Leadership.
Boom. Coming
out. Bonus round, weekend readable.
Yep.
It's got the right length to it. But what completely separates this book is you have, forget about the book of the year. Maybe it is, maybe it's not. I haven't read it yet. You have the forward of the year. How did you get Larry Culp to give you the forward to your book?
I cold called him, and he was kind enough to accept to participate. Larry was on the board of directors for a while for Rowe Price, and I use every connection I could get to try to get to him to ask him for this favor. It's
what are the
kind.
best practices of Mr. Culp at Rowe Price, at Danaher, and the miracle he's wrought at Generous Electric? What are the Culp best practices?
He's really into the Japanese approach to quality and Kaizen, and he's really into listening to the customer. I remember, Tom, I had to present to the board once about my business, and the story is in my book, but I presented a range in terms of my growth forecast for our business, and the range was pretty wide. Larry Culp would not have it. He said, "What is your goal?" So there's a lot of discussions around that.
Our goal right now is mental stability with our portfolios. Lisa's medicated. But what do we do with this uncertainty out there right now? How do you approach that?
We're not panicking, Tom. I think markets, the economy, I think we're going to be okay. We're looking at a slowdown. The data for the consumer is showing that things are slowing down. And the markets is selling off, but it's not just because of tariff headlines. It's because of the growth slowdown. It's because we had extremely high valuations going into this. And yes, the word of the hour, uncertainty. So it's a combination of all these things, but I don't think we're getting a recession.
How about the consumer? We've seen some University of Michigan data last week, which was a little concerning. We had the airlines take their guidance down, forward guidance down. We had a big broad department store like Kohl's take its guidance down. How do you think the consumer's doing these days?
So I don't like the last two retail sales prints. The last one was positive, but still below expectation. The one before was revised minus 1.2% month over month. Those two data points are not good, and they're showing some slowdown. Overall, the economic surprise index in the U.S. is in negative territory. But I'm not counting the U.S. consumer out yet. Unemployment at 4.1% is a low number for unemployment. Wages for the last 12 months are growing at 4% and inflation's at 3%. This means that wages are growing faster than inflation. And I know it's it's really not distributed equally, but the aggregate shape of the consumer is quite good. The level of household debt to GDP is near a 20-year low. Again, not every not every segment of the consumer is healthy, but in aggregate, I'm not counting it out.
You're head of global multi-asset, so you can go anywhere. Where are you going these days? What are you talking to your portfolio managers about?
Going into this, we had been adding to Europe, to international stocks on the value side. It turns out right now it's maybe, aside from gold, the best performing asset class year to date. It's up 13%, and we're likely to continue to add. European banks, for example, used to trade at 2 times their book value prior to the global financial crisis. They're at 1x their book value. So we think there are opportunities there with positive interest rates.
So as we think about these, a 10% pullback, let's call it an 8% pullback in the S&P, maybe a 12% pullback in NASDAQ. Buying opportunity, buy the dip, be cautious? What are we doing here?
So we've been de-risking, but we're at kind of neutral on risk assets right now. We're waiting it out. If the VIX goes to 30 and stocks sell off 15, 20%, we're more likely to buy than to sell. So that's what we're kind of watching right now.
I'm kind of hearing that a lot. Like, we had Stuart Kaiser from Citigroup on from the trading desk there at Citi. He's not buying here, but he's like, we're close. I mean, but to me, it seems like it's kind of all about the earnings out there. If the consumer's pulling back, if there's a lot of uncertainty out there, I'm not sure I can depend upon those earnings numbers that I see out there on the street.
It's interesting to compare the U.S. with Europe right now because the earnings estimates in Europe are trending up and the surprises are looking good, better than in the U.S. Yeah. And then you look at profitability of European stocks, it's on the way up, whereas in the U.S., it's stabilizing.
It's stabilized. We got a couple things to do here, but Sebastien Page, I got to ask this right now. There's so much uncertainty out there. All my radar says that's a massive opportunity. Define the opportunity that comes out of any given uncertainty.
Uncertainty up, stocks down, usually. Yep. And historically, when there's panic in the market, I know, Tom, you like to watch the VIX. When the VIX hits 30, historically, it's a good time. It's a good time to look for opportunities. We like non-U.S. value stocks because you have a valuation advantage. You have short-term momentum, and that short-term momentum is supported by fundamentals.
Okay, so you knew, Paul, years ago, that you looked at Canton, which was the best school in northern New York. You could literally hear the St. Lawrence River, whatever, up north there. Or Clarkson, which was solid D1 hockey. And they'd have 6 ringers from Quebec on there. You don't know this, folks, but Sebastien Page looks like that left wing you hated on the other team. He spoke perfect English, but when he stepped on the ice, he'd only speak French, so you're even more intimidated by him. You grew up in the heart of it. You go from Victoriaville down through Windsor to the land of hockey sticks, Sherbrooke, Quebec. Yeah. Is your Quebec going to be on board with Mark Carney in this battle with the United States?
I started playing ice hockey at the age of 5. You have to do that in Quebec. I'm kind of conflicted because I have dual citizenship, U.S. and Canada. I think things will normalize. We just have to be patient, wait some of it out, and just go along with a good faith negotiation. And again, my heart is in both places.
So what did you do in the hockey game here the other day, U.S. Canada? It was great.
There was theater. Yeah. Well, when I swear and I watch hockey, I swear in French.
Yes. See, there you go.
Well, Lisa swears in French when I miss my cue. I got to ask. We got to get to Jane Foley here, but this is too important. Victoriaville, CCM 5-stripe, or did you go with the local Sherwood?
The local Sherwood.
Got it. I had
the best hockey sticks.
I had the Victoriaville toe curve. It was the only thing. I'd pay a lot of money now.
Yeah, we used to heat it up and curve it exactly with the right angle.
People are nuts.
You get the blowtorch out. Heat it up. Your mother would be like, "Don't burn up the basement." Jane Foley's in London going, "What in God's name are they talking about?" Sebastien Page, thank you so much. Book The Psychology of Leadership is the book. This will be out soon. You can't get it today. Lawrence Culp with the introduction to The Psychology of Leadership.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, "Alexa, play Bloomberg 1130.
Jane Foley, she is in RaboBank. We really appreciate her coming on short notice. I don't want to do a international relations bit, Jane Foley, on Turkish lira out 2 big figures, 36 to 38. But it's destabilizing within an emerging market disaster, idiosyncratic disaster. What does it signal to the people of Turkey to see such an abrupt weakening?
Well, of course, this is related again to the idea that Erdogan is reasserting a more authoritarian rule. Certainly over the last few weeks, I suppose that there has been a lead up to this, not a huge surprise. But of course, Erdogan needs to have an early presidential election if he wants to win again. And it looks as if he's taken out some of his main opposition. Now, from the market's point of view, of course, there is a fear that this could be a return to unorthodox policies too. But of course, for Europe, there is something else as well, and this is all related back to Turkey's want potentially to become a member of the EU, but also what we've been seeing this year in terms of NATO. Europe, of course, having to step up in a much bigger way for its own defence, and Turkey putting out there the possibility that it, with its second largest army within NATO, could play a greater function in that defence if perhaps it had a little bit more power within the EU. So that is something which I think has created more uncertainty in politics in Europe.
Paul says enough talk on Turkey. Paul wants to know what the euro's going to do for travels this summer. Are we going to actually model out a euro to 115, stronger euro?
Well, we've got 112 as our target.
Oh, there you go, Paul. Cancel that trip.
Exactly.
But, I would say that, when with your previous guest, you were talking about U.S. stocks. I think, to put it in context, one of the biggest changes for the markets this year has been the news regarding German, fiscal policy and the movement higher in terms of GDP that we've seen for some German big forecasters now, not for this year, but for next year and the year after. That's a real sea change for Europe. And of course, we've seen a big sea change in China too. And that, of course, with DeepSeek, but also the BYD battery system that we've heard about this week too for autos. And I think these two things have really created, a lot of change in terms of what investors are looking at in terms of investment opportunities. Last year, it seemed to be just about the US. Now people are thinking, did I overlook Europe? Did I overlook China? There are opportunities there which I didn't realize were potentially there last year. So this is really significant, and that is why the euro is looking a lot better, even though some of that money may not be spent immediately. It is coming in Germany, and that's a huge difference.
Pound sterling's had a nice kind of run here this year as well. Here, what's driving that, Jane, and kind of how do you think about that going forward?
Well, the cable certainly had a jitters right at the beginning of the year, partly related, of course, to US yields dragging, gilt yields high, but also the poor growth outlook, which doesn't look good for government finances, which of course is strained in the UK. Now, cable has gone higher since then, but that's largely related to the weakness of the dollar, to be honest. I think the euro story has meant that sterling is going to struggle now to win more ground back against the euro. But there is a statement, a budget statement, or the spring statement, I should say, on March the 26th, the government really going to have to come back on spending in order to play by its fiscal rules. So, but I think sterling is out of the limelight, given that the news has been so much about Germany within Europe this year.
Jane Foley, on short notice, we really appreciate it. Team Surveillance appreciates your effort this morning. With RaboBank, Jane Foley in London.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Our next guest joins us here, Dean Kearney, CEO and founder of Macro Risk Advisors. What's going on with gold? I mean, I get it, safe haven kind of thing, but is something else going on here?
I think there's a number of things. I mean, first, sort of stepping back and thinking about this idea of diversification. And, it's a time-honored pursuit in markets, and it's elusive. And what I mean by that is you can try to pick stocks that zig and zag with one another, but it turns out that when there is a risk off, that's when correlations, really rise. So you have got to find assets that are just unlike equities. And what I would say is gold is truly unlike stocks. If I look at the last 20 odd years of both returns and correlations in the S&P and gold, the realized correlation of daily returns is 5%. That is absurdly low. And you just can't find something like that in the equity market. If you just chose even two random stocks, you're going to get correlations in the 40 to 70%. So gold, first and foremost, is a diversifier. And second, it's a limited supply asset. And I think that's critical as well. An asset that does not have limited supply is treasuries, right? We're awash in treasuries. And I think right now you want to find those assets that are disciplined And gold is a disciplined asset in that there's just not a supplier of it.
I want to come back to gold, but Dean, this is too important a question. Is persistent free cash flow a scarce item right now?
I think in some ways, yes, I would say that as well. The market, of course, has been pricing this gigantic CapEx spend. Growth in CapEx has obviously been a big part of what's empowered the Mag 7. Compare the sort of top of the S&P, the Mag 7, to where we were 25 years ago. And just to use this word discipline again, profitability in these companies currently is much higher than it was back then. The PE ratios, while they're high, are much more modest than the Cisco and the Intel the PE boom that was the 2000s. So free cash flow is an important aspect of markets. But I think, right now we're in this period where the market's taken a good look at future earnings and also, re-rating the PE.
The water's coming out. Who's wearing no clothes as the tide pulls out right now? Where's the exposure that could be embarrassing in the next 6 months?
Yeah, I think that it's
the Europe play.
No, I don't necessarily think that that's as big an issue. I mean, I think if anything, folks are excited about the big change in debt trajectory, at least potentially in Germany. We'll see how that plays out. I think the question around valuations is always going to be an important one. And at some point, this U.S. exceptionalism theme got to be, I believe, reasonably overdone. When a market outperforms to the extent that the U.S. has, any allocation to foreign stocks, for example, has proven to be, taking away from your return. And I think people just crowd into a winner. And I think that's where the risk is.
Let's talk, Paul, the arcane language of Dean Kernet.
Uh-oh.
Vol on Bitcoin and assets related to it, MSTR miners, is getting hit hard. 1 month implied on IBIT is just 47, and that's what's in English. The rest of it's in Greek. I mean, this pro-derivative stuff, folks, is it's sort of like in the third season of Game of Thrones. It's just a little arcane to say the least.
Off the rails a little bit. Dean, what are your clients doing in terms of this year in 2025? We've had a higher degree of economic policy uncertainty, which has impacted financial markets pretty significantly. What are your clients doing in the derivatives market to try to, I guess, play that, if you will?
Yeah, so I think our major call and our conversations with clients have focused on this idea that the stock market was diversifying itself in a way that was unsustainable. And what do I mean by that? So if we just look at the Mag 7 and we look at the way in which its movements are relative to the rest of the market, zigging and zagging, a lot of diversification, even within the Mag 7, unsustainable levels of diversification. And what that did was it reduced the overall level of volatility at the index level for the S&P. And so as the Trump administration came in, and of course there was a lot of enthusiasm for a pro-growth agenda, I think that the stop-start of the tariffs has been very, very difficult for folks to handicap. And so, earlier this year, we really pushed people to say, okay, look, let's buy some insurance. And, insurance is something you have to pay for. It's not free. Nothing like that is free. But there was an opportunity to do relatively basic trades in the S&P that allowed you to defray your risk for what we thought was a really reasonable cost. That's worked quite well.
On your morning commute across the nation, good morning, 99.1 FM in Washington, Bloomberg 1130 in New York, 92.9 FM in Boston, and all the digital process that we have. Good morning, Sirius XM. On YouTube as well, Dean Kernet, Macro Risk Advisors. What do the cross moments tell you? You're right about skew. Folks, here's the Greek. 1 month, 25-day call vol is up 3 from a week ago, and 25-day put vol is up 4.4. Translate the cross moments, particularly skew, right now.
Well, let's just step back and look at this 10% drawdown that we had. In the S&P, there's only a handful that you can find over the last 25 years. Some of them are the doozies of the GFC, COVID. You have the VIX event in 2018. This one has been unique in the combination of the speed of it, which has happened over just 20 odd days, but a relatively low level of realized volatility, 20% realized volatility. And it's really the absence of very large moves. So if I look at my subset of 10% drawdowns, I always see at least 2-3% down days in the S&P. My biggest move on this drawdown is just 2.7%. So it's the sequencing of down 1%, down 1.5% that has led to, pretty good destruction of wealth at the S&P level. That, of course, has lifted the VIX, but it's been a controlled demolition, as one client put it. And I think I think that's well said. So the cross moments, I don't think are flaring in a big way. It's not like we had a VIX of 10 that went to 30. We had a VIX of 14 or 15 that climbed its way into the low 20s level. So it's, like I said, very controlled. And I think the handoff here is, okay, the pods for the big multi-strat hedge funds have had to de-risk. That's caused a lot of factor volatility, a lot of rotation. But the big handoff now is, what is the impact on the real economy? I took real interest in the piece on the Bloomberg terminal yesterday, quoting Morgan Stanley's president saying deal making has really gotten frozen here.
Yep.
Right. So it does feel like corporate America has been stymied by the start-stop of the tariff negotiations.
Again, we've had this drawdown in the S&P roughly 8% here. The peak to trough was roughly 10%. If I want to buy downside protection here, how much more expensive is it today versus a couple of months ago?
Yeah, certainly. They say you can't trade the VIX, and that's true. The VIX is a calculation agent. It sort of dutifully takes in all option prices of the S&P and pops out a number. But really what it represents is the cost of insurance. And so when you move the VIX from 15 to 20, you're popping the cost of insurance up by kind of 30%, 1 month insurance. I like using what they call put spreads, which is what I would call a modified insurance policy. If the market truly crashes, that put spread is going to get me some insurance back. I'm going to get paid back to some extent, but not GFC style insurance, right? Where I would have needed a gigantic amount of insurance. So we like using put spreads here because, the VIX is at 20. It's not as if it's a steal, but I do think, continuing to maintain some insurance is important.
So translate the pro put spread structure over to someone like Lisa Mateo with a 501k. She's killed it on the tech play. She's not going to do a put spread on a 501k. How do you be defensive within a retirement program?
Right. And this is where I come back to, insurance is costly. We don't ask Geico to sell us car insurance and not expect them to make money. You shouldn't expect Goldman Sachs or Morgan Stanley to sell you financial market insurance and not to make money. Insurance is costly. Over time, that cost can add up. And so where our focus at Macro Risk Advisors has been on diversifying assets like gold. And gold is acting really nicely defensively, even as it trends higher. So it's not a tail risk hedge that you can truly count on. There is some basis risk, but because it's got this limited supply profile, and this is the most important part, it occupies a space in the sort of collective intelligence of how people think about markets, that it benefits from chaos. And, sadly, I think the world is having to confront a lot of uncertainty here. And so as we try to price in the what ifs of Russia, Ukraine, of tariffs, of monetary policy, that's a lot to take in. And gold benefits from this sort of widening of, what we have to handicap in terms of potential outcomes.
Clients you talk to, do they think there's another leg down in this market?
Yeah, I'd say it's very easy to paint pictures of, further downside. I think it comes, back to how much is the real economy truly affected by the tariff uncertainty.
I got to get this in. I mean, it's cruel and unusual punishment. You actually bring your children in to see Bloomberg surveillance. Can we say good morning to Mr. Thompson? Really appreciate his attention to the show. My young kids even watch you on YouTube while they eat breakfast before school.
Okay.
I went back and said, well, what do they eat? I figured it was like Fruit Loops or, and it's like a Lisa Mateo breakfast. They're having like gluten-free this and the oatmeal and come on. So we
Captain
say
Crunch.
to Mr. Thompson, this is cruel and unusual. Punishment is, well, you didn't bring your offspring in today, did you?
She could not make the 5:30 wake-up call. So
either could I, but that's a separate story. Dean Kernan, thank you so much with Macro Risk. Can't say enough about his research note. You've got to get that through Macro Risk Advisors.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
This is a real bias that I have, folks, which is that we like people with prodigious engineering chops. We get some wonderful pedigree in here. Aaron McLaughlin joins us now with the conference board. And I mean, the road interview is, what's the Fed going to do? But underneath it all is shocking competence in transportation, urban studies, and engineering. So we're doing a massive audible here with Erin McLaughlin on her massive, unique wheelhouse.
Good morning.
Why does it take so long to build anything? Paul Sweeney is out there every day looking at the tunnel over to New Jersey.
Absolutely.
Why in America does it take so long to build anything?
Permits, land acquisition, environmental regulations, not in my backyard.
But do they have
all of those things?
Do they have not in my backyard in Switzerland?
I imagine they must, although I just went to Switzerland a couple of weeks ago, actually, and learned that it's smaller than my home state of Massachusetts by population. So, there's a lot more homogeneous thought, perhaps, in other places in the world, as we know. I think it's really interesting that the current administration is going to speed up federal permitting, federal regulations, but we still have state permitting and regulations and lots of other bureaucracies that will slow things down. And our supply chain is physical. So this is all really relevant conversation as we talk about reshoring.
Let me get one more thing in here. Whether they're building an Intel factory somewhere, semiconductor and all that, do we have the labor to do the infrastructure you're expert at? Or do we have the labor to actually run the companies better than you do 3 miles west of Hong Kong?
It's very interesting, and that sort of lends itself to the big uncertainty. Construction labor has, I believe, the highest percentage of foreign-born workers. So my friends that are directly in the construction industry right now are seeing labor shortages be exacerbated by some of the policies. And yes, we go to surveillance construction expert Paul Sweeney here. How about that bathroom redo right now?
Oh, looking solid, although we're still waiting for a couple of things. Talk about construction. The Gateway project, the coming into the what's going to be the new Lincoln, the new tunnel, the railroads. Unbelievable what they built in just this couple of years' time.
It's really cool.
Again, the progress that they've made out there building that new railroad thing in North Jersey is pretty cool. What we've been dealing with over the last couple of months, Aaron, has been economic policy coming out of Washington that we're hearing across the board, whether it's talks of tariffs or changes in immigration policies, creating a level of uncertainty out there for everybody. How do you guys reflect that in your data at the conference board? What are your companies that you talk to? What are they saying?
So our companies are members of the conference board. What we're hearing from them is, of course, uncertainty, but it is creating, I don't want to use the word paralysis, but it is creating an extreme slowdown in decision making. And that slowdown, we think, will ripple into the economy and cause an economic slowdown.
And Tom was just calling out the UBS chief executive. He's over in London. He's saying, hey, basically their M&A stuff is frozen. I mean, because people don't know what to do. How about consumer confidence? Because here in the U.S., that's 70% of our economy is kind of the consumer. What's your data showing?
So the conference board is very well known for our consumer confidence index, and it sort of dipped for the first time into what we would consider recessionary possible territory. We are not calling for a recession, but consumers are seeing what's happening around them, and they are cutting back on spending that may be discretionary.
You have 4 degrees in the act of transportation and infrastructure, including Oxford University's wonderful infrastructure development and finance effort. Erin McLaughlin, the congestion tax, Do you have an opinion that won't get you in trouble with the general counsel of the conference board?
Well, I know you all were watching outside the windows, as was I, since I'm based here in Midtown Manhattan, and it certainly did ease up it seemed to work. Like anything else, after a while, it would probably have less of an impact. Folks would get, accustomed to sort of paying the fee, but congestion weighs down our economy. So there's both sides to the conversation.
Okay, they're in my ear. Ask her one question about the Fed.
Oh, yes.
What are we going to say? Is the consumer in this shutdown so broken that the Fed has to do an audible today and say, we're going to wait?
I think the Fed will wait. Yes. And I think it will be interesting going forward to keep an eye on labor. Labor data will increasingly be more important this year.
Now, when you leave the building, if John Tucker or Michael Barr tackle you to look for a parking garage north of 60th Street, just run.
I will.
Call security and
Absolutely.
run. Aaron McLaughlin, thank you so much for the conference board, senior economist. And we're going to get her back on this whole infrastructure debate where everything takes forever to build.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
It is the newspapers, and they've really been something. We'd like to do some lighthearted stuff here, folks, but I'll tell you, just newspaper to newspaper right now, absolutely unreal. The jumble that's out there with an unreal report today. Lisa Mateo, what do you have?
Well, we always hear different stories, right, about President Trump's hostility toward Canada, how that's affecting different things. Now it's actually could be hurting New York City tourism. So this was in the New York Times. They say more than 1 million Canadians visit New York City last year. They spent about $600 million. Only the British visit more than Canadians to New York City. I didn't realize that. So now a lot of them are canceling their trips since he imposed the tariffs on Canada, threatened to make it the 51st state. So the data shows last month the number of Canadians flying to 3 airports in and around the city fell 11% compared with 2024, that same time period. And the New York Times, they spoke with different tourism guides. They said school groups, they're calling off those end of the year trips.
That's the sad part.
Retirees, newlyweds, friends, families. And they say the tourism boycott could extend because now people are planning 2026 trips. So they might be canceling those as well.
I want Paul to talk here because I'm afraid of what I'll say.
No, it's just it's sad. And again, you think about Florida, and I think I know a lot of Canadians go to the Phoenix area in the wintertime for all that kind of stuff. So it's not good.
I would say more than anything here, I'll just opine, it's this talk about a 51st state. Mm-hmm. I grew up in basically southern Toronto, which was called Rochester. And across Lake Ontario, I think the airplane flight is 18 minutes or something. Right. And it's this talk of a 51st state is just
it hurts.
Painful.
Yeah.
Next, you got something lighter than that, please.
How about this? More companies leaving Delaware for Nevada, okay? Yeah. And it's called Dexit. That's what they're calling it. So Delaware's new governor, he's just warning. He's saying they're rolling the dice by leaving to Vegas. But the reason why they're doing it, they say Nevada offers a much safer bet than Delaware. And it's recently become easier to move because Delaware's Supreme Court changed recently. They cleared companies to leave the state. So they agreed with Nevada's argument because Nevada says it should be the companies and not the courts that should conduct those cost-benefit analysis over what state offers that better deal. So they've had a few more. You had Bill Ackman's Pershing Square, Dropbox, the Trade Desk. They've gone from Delaware over to Nevada.
Well, it's a huge franchise they've got down in Wilmington.
Yep.
Say the least. Next, what do you got?
Okay, so the next time any of you please go to the Taco Bell drive-thru, okay, especially those late night runs. AI could be taking your next order. We have Yum Brands. They own Taco Bell, Pizza Hut, KFC. They're partnering with NVIDIA to build these AI-driven services in the restaurants. So Some of them are AI-powered voice ordering at the drive-thru. So now AI, you won't be talking to a person, you'll be talking to, I guess, a computer. And it's going to be used in about 500 its locations. But they're saying it's going to help boost sales doing that instead of, going with the regular humans. But they're saying that the humans are not going to disappear. They're still going to be there. They're just going to be focused more on customer service and helping the customers.
All right.
Instead.
All right.
But they're using it in different ways, internal things too. But McDonald's too has been, talking about the different technology that
Number
they're
2
using.
with a Coke. How hard is that? I've been ordering that since I was 15.
What percentage of their business is like seamless DoorDash, Grubhub?
That's
It's
a good
gotta be
question. Yeah.
ginormous.
I know in my house it's ginormous. But
Not in my house.
I picked up the bag of McDonald's. I said, why are we ordering McDonald's? Who are we?
I know.
What have we become?
Well, it's different when you walk in. Truth be told, I went to a McDonald's last week, and you go in there, and it's just a computer screen. You can't go up to the person anymore.
Really?
Yeah,
so
hate
you're
it.
sitting there, and I'm confused. I'm sitting there pressing like 50 million buttons. I'm like, what? I could have just gone to the person, told them what I wanted,
Number
and
2
be
with a
done
Coke.
like this.
They made it so easy back then.
I was so confused.
All right. Figure it out.
But technology, things are changing.
Lisa Mateo, the newspapers.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.